Howdy, everybody. Welcome to Liberty Call. Today is Monday, March 3rd, 2025. Hope you're having a fantastical day out there in the interwebs. It was a nice day here in Colorado. It was all sunny and clear and everything, but we have a snowstorm coming through, and we're going to get dumped on overnight. And I have a tickle in my throat, which started about 45 minutes ago. Was fine all day. Totally fine. I got to do a video. It gets all tickly, and I'm like, anyways, all right. Well, markets are tumbling after Trump confirmed 25% tariffs on Canadian and Mexican imports, with the Dow down over 1.5%, the SP 500 off 1.7, and the NASDAQ sliding 2.3. It's actually worse than that now, I think, or right around that. Meanwhile, Bitcoin surged 20% over the weekend before pulling back after Trump announced a U.S. strategic crypto reserve. Manufacturing data is softening, Treasury yields are dipping, and the Fed remains cautiously optimistic despite economic uncertainties. Plus, market strategists are warning investors to tread carefully. So before we break it all down, if you could do me a favor, give me some thumbs up, a like, a share, subscribe, a follow, and hit that notification bell. All righty. Let's get into today's markets. Dow Jones down right at 1.48%, 648 points, closed at 43,192. SP 500 down 1.7%, 101 points, closed at 58.52. NASDAQ down 2.64%, 497 points, closed at 18,350. The VIX was up 15.74% today. It's at 22.72. Canada down 1.54, Brazil down 1.6, and Mexico down 3.39. In Europe, they were jumping. Germany was up 2.61, the UK up 0.7, France up 1.09, Netherlands up 0.92, Spain up 0.19, Italy up 1.07, Switzerland up 1.39, and Portugal up 0.17. Russian exchange is still red. MOX down 1.52, RTSI down 2.61. Excuse me. And then the overnight markets, the Nikkei in Japan was up 1.81, Australia up 0.9, New Zealand down 0.06. In China, the Shanghai was down 0.12, Shenzhen Component up 0.36, China 50 down 0.29, DJ Shanghai down 0.02, Hang Seng up 0.28, and the Taiwan weighted down 1.29%. Itchy nose and scratchy throat. I don't think I'm getting sick, so I think it's just allergies. All righty, well, let's hop into our weekly economic update. Stocks were mixed last week as investor concerns over inflation and trade policy combined to produce another volatile trading week. The Dow Jones rose 0.95%, while the SP 500 lost, 0.95 for the Dow. The S&P lost 0.98. Meanwhile, the tech-heavy NASDAQ dropped an eye-catching 3.47%, and overseas markets lost 1.03%. All right, trade talk. The week began under pressure after the White House said 25% tariffs on Mexico and Canada would begin after a 30-day pause ends in early March. On Tuesday, S&P and NASDAQ stocks continued their slide on news that consumer confidence weakened more than expected. Concerns about inflation and tariffs merged with investors fretting over economic growth and global trade. It was the fourth straight day of declines for the SP 500 and NASDAQ. The Dow, however, advanced for its third consecutive session. After a quiet Wednesday, stocks fell broadly on Thursday after a White House announced additional tariffs on goods from China and Europe. A large chip maker prominent in artificial intelligence matters produced a mixed corporate report for Q4, which put some pressures on the broader market. Friday's news that inflation moderated boosted stocks, with prices accelerating higher into the close of trading. The Fed's favorite core inflation measure hit 2.6% in January, which aligns with forecasts. All right, getting a read on tariffs. Markets dislike uncertainty, so steady trade talk. So steady trade talk produces volatile intra-week trading. Investors don't know what tariffs will be enforced versus which ones are part of ongoing negotiation, which can produce unsettling price swings. The SP 500 companies, SP 500 companies echoes some of that uncertainty. At last check, 146 have mentioned the term tariff or tariffs on Q4 conference calls with shareholders, the highest level since Q2 of 2019. Key economic data this week. Today on Monday, we have the ISM manufacturing report and construction spending. Tuesday, auto sales, and New York Fed President Williams is speaking. Wednesday, the ADP employment report, factory orders, and the ISM services index. Thursday, productivity, trade deficit, and wholesale inventories. Friday, Friday is the employment situation, consumer credit, New York Fed President Williams speaks again. Companies reporting earnings this week. Tuesday is CrowdStrike, Target, and AutoZone. Wednesday, Marvel Technology. Thursday, Broadcom and Costco. All right, so that is about everything there. All righty, well, let's jump into our market recap. SP 500 slumps as Trump confirms Mexico-Canada tariffs begin on Tuesday. The SP 500 tumbled Monday as President Donald Trump confirmed that tariffs on Mexico and Canada will take effect on Tuesday, adding further pressure on the economy, just as economic data continued to disappoint. The February market sell-off was fueled largely by volatility from Trump's tariff policies and losses in the tech sector, particularly in AI-related stocks. Trump announced that tariffs on Mexico and Canada will proceed, ending speculation that last-minute negotiations could delay their implementation. The tariffs include a 25% levy on non-energy goods from Canada and all Mexican imports, alongside a 10% surcharge on Chinese imports. Economists warned that these tariffs could strengthen the U.S. dollar, making American goods less competitive in global markets and potentially worsening inflationary pressure. The ISM Manufacturing Purchasing Managers Index for February registered a 50.3, slightly below expectations, but marking the second straight month of expansion after 26 months of contraction. Timothy Fiore, chair of the ISM Manufacturing Business Survey Committee, noted that while demand eased and production stabilized, the first economic shock of Trump's tariff policies is already being felt. NVIDIA plunged 9%, leading the broader chip sector lower after reports surfaced that Chinese buyers are bypassing U.S. export bans to acquire NVIDIA's Blackwell AI chips. Intel initially surged on news that NVIDIA and Broadcom are testing its chip manufacturing capabilities, but it later paired gains. Bless you, Jake. All right, moving on. Bitcoin initially served on Trump's announcement of a U.S. crypto strategic reserve, which would include Bitcoin, Ether, XRP, Solana, and Cardano. However, the rally faded and Bitcoin dropped over 8%, reflecting ongoing market uncertainty. And finishing up here, Capri Holdings shares climbed amid reports that it is close to selling Versace to Prada for 1.5 billion euros or $1.6 billion. The deal, if finalized, would be a significant move in the luxury fashion space. Awesome stuff. All righty, let's get to some data here. The February ISM Manufacturing via First Trust, Mr. Nate Guernsey put this report together. All right. The U.S. manufacturing sector expanded marginally for the second consecutive month in February, but underlying data showed significant weakness, raising concerns about future growth. Nearly all major indicators declined, with new orders, production, and employment slipping further into contractionary territory. The new orders index fell sharply to 48.6 from 55.1, signaling weakening demand. Production slowed, dropping to 50.7 from 50.9 in January, and the employment index fell to 47.6, marking the 10th month in the past 12 that the sector has shed jobs. A key factor behind the manufacturing slowdown appears to be policy changes out of Washington, particularly Trump's new tariffs on Mexico, Canada, and China. Survey responses highlighted concerns over rising costs, supply chain disruptions, and delayed customer orders due to uncertainty surrounding tariff implementation. One respondent in the computers and electronic products industry noted that budget limitations in the key government agencies such as FDA, EPA, and NIH are further delaying orders, adding to economic uncertainty. While overall manufacturing stagnates, inflation within the sector is heating up. The prices paid index surged to 62.4, the highest level since the 2022 inflation crisis, indicating that manufacturers are facing rising input costs, which could lead to higher consumer prices down the road. With inflation pressure still lingering, the Federal Reserve may need to take a more aggressive stance on monetary policy, despite the short-term economic pain that could result. In other economic news, construction spending declined 0.2% in January, driven by a large drop in home building, which offset smaller gains in other areas. This further signals a fragile economic environment and with businesses and consumers facing policy-driven uncertainty. Well, that's awesome news. All right. Well, let's get to our last article here, the Monday Morning Outlook from Mr. Brian Westbury at First Trust. This week's article is titled Recession Alert. Let's see what's going on there. While the U.S. is not officially in a recession, early data suggests that Q1 GDP growth is likely to be negative, raising concerns about economic weakness. The Atlanta Fed's GDP Now model is currently tracking a negative 2.8 growth rate for the first quarter, largely due to weaker consumer demand, housing declines, and a surge in imports that artificially lower GDP calculations. Some key points are retail sales fell 0.9% in January, signaling weaker consumer demand. Housing starts dropped 9.8%, while existing home sales fell 4.9%. Manufacturing production declined along with capital goods shipments. Personal savings hit a new post-COVID low, indicating financial strain on consumers. And unemployment claims jumped to 242,000, potentially reflecting early layoffs from government spending cuts under Trump's Department of Government Efficiency initiative. The biggest driver of Q1's expected negative GDP is a massive surge in imports, since GDP calculations subtract imports. The front loading of purchases before Trump's tariffs take effect is artificially depressing these numbers. However, the effect is temporary and could reverse in Q2, leading to a stronger reading next quarter. So what happens next? Despite weak Q1 data, a full-blown recession isn't confirmed yet. Extreme weather events, cold winter, and California wildfires likely impacted retail and housing activity. A reversal in import trends and ongoing Trump administration spending cuts will further shape the economic outlook. So some long-term considerations: the Trump administration's focus on reducing government spending may be beneficial for a long-term economic health, but short-term pain is inevitable as businesses and consumers adjust to a less government-dependent economy. And in conclusion, while a negative Q1 GDP print is concerning, it does not confirm a recession. Future data, particularly job growth, consumer spending trends, and the impact of tariffs, will be key in determining whether the U.S. economy is truly at risk of contraction. All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there, so give me a buzz. I'd be happy to help. All right. Well, hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.